Welcome back to the Think Bigger Real Estate Show. I'm your host. On today's episode, we're going to be talking about how to leverage a life insurance policy or policies to be able to build true wealth. You as a real estate agent are going to be able to take this information and immediately in the ears and eyes of your clients be able to be seen more as an advisor as opposed to just another common agent. And by the way, these tools will also help you to build wealth faster than going at it the old traditional ways. Stay with us. This is going to be a great episode. The big question is this: how do those of us in the real estate industry with crazy amounts of ambition, how do we think bigger than the building of our own empires? How do we simultaneously seek success and significance, income and impact? My name is Justin Stoddard, and this is the Think Bigger Real Estate Show. Again, welcome back, everybody. Excited to be here. Today, we have a special guest. His name is Dan Thompson. Dan, thanks for coming on the show today.
Hey, thanks for having me, Justin.
Dan is based outside of Boise, Idaho, and his claims to fame, he's been an advisor for over 38 years, and he's an author, and probably most importantly, he really helps people to eliminate taxes. Yeah, I know you've heard of the term minimize taxes. Dan likes to take it to another level and actually help you to eliminate taxes. And part of the way he does that in building and scaling a number of different companies, really at the base of that is the power of a life insurance policy. So Dan, it's a pleasure to have you here.
Yeah, man. Good to be here. Hope you're having a great day over in your part of the world. We got a good warm day here ourselves.
Good. Awesome. Yes. All of that. It's not warm. Well, I shouldn't say all of that. It feels like Oregon all of a sudden. It's cloudy and cold, but nevertheless, we're smiling. We're excited. So talk to us a little bit about your story, Dan. Obviously, kind of knowing you, you've got a number of different businesses. Talk to us about that.
Yeah. So I started kind of as more of a traditional stockbroker 38 years ago. Yeah, I'm an old dude. And after, spending a lot of time just really studying that market, and I really enjoyed it. But every time we had a few good years, all of a sudden a bad one or a bad two would come around. And after the dot-com boom and bust in the 90s, I just had to find a better way. So I kind of went on a quest, if you will. And for about almost 2 years, just looked at everything. Where can we put money that's predictable, that's a little safer, but yet still makes money? Because we all like to make money, right? So it was, and then I ran across this infinite banking concept, which was kind of unique, and I was intrigued by it. And I actually spent some time with the author of the book, Becoming Your Own Banker, with Nelson Nash. Spent some time with him, really learned the ins and outs of that. But I also learned probably fairly quickly that was a great start, and it would do okay. But what you really needed to do was leverage the life insurance into other assets that produce cash flow, tax advantages, and get into those double-digit returns. And then obviously using some tax-advantaged investments, potentially reduce, if not ultimately eliminate, your taxes.
I like it. So let's talk about that. Now you yourself own a contracting business. Obviously, you're a wealth advisor. Are there other businesses that you've launched and funded with this infinite banking concept, meaning you're the bank as opposed to taking out an SBA loan or tapping into other sources?
Yeah, it kind of started early in the 2000s. I would build up a policy and then I'd want to do something with it. And of course, kind of the infinite banking concept is, be your own bank, go buy a car, pay yourself back. And I'm like, okay, you're not going to get wealthy doing this. We got to find better use for this capital. So what I started doing is I started lending to a local builder so that he could use my funds essentially to build houses. And after about 2 years of doing that, he says, Dan, why don't you just start your own company and I'll kind of be your general contractor and, we'll make it work that way. So that's what I did is I used my policy, opened up a contracting company, and now we've been at it for many years now. And ultimately about 3 years ago, my youngest son decided he really liked building. And so he took over the operations side. But we did about 45 million last year all off of starting with life insurance policies. And then since then, we've opened up an e-commerce store. We've gotten into a lot of real estate. I used my policy to buy some student housing at Texas A&M, and we're just getting that project built up. And then we're looking seriously at doing some car washes now, because those are very good cash flow and fairly predictable.
Again, my objective with this conversation for everybody listening, as I mentioned before, is to help the real estate agent to move from agent to advisor. When you can begin to have conversations that parallel that of a wealth advisor, all of a sudden you can be at the same table as a wealth advisor, and they're willing to bring you to the table with their clients. But if you just say the same old stuff and have the same old strategies as everybody else in your industry, it's hard to do that. And what I hear you saying here is really using the power of a life insurance policy to develop a number of different businesses, which could be real estate related or it could be not real estate related. But I think that what you're saying here is really powerful. And I think I like what you said is that sometimes people will use this simply as a way of paying lower interest on consumer items. And what I hear you saying is, no, there's a much better way to go about using this life insurance policy, is to actually leverage it to start businesses that, as you said, can have double-digit growth.
Well, and not only that, but real estate sometimes doesn't happen. If I say, oh, I want to buy some real estate, it might take me months, if not years, to find the right piece of property, especially when it comes to multifamily, which we really like, but it can take a while. So being able to store your capital inside these policies while you're waiting for those opportunities to come. But here's the nice part. When you use your policy as leverage, you really don't take your money out of the policy. So you're still getting the buildup of what's going on inside the policy, even while you're using it in real estate or e-commerce or whatever else you're doing. So we love the fact that it's a great storage place, and then we can use it, and then it can continue to grow and compound even while we're doing something else. We get $1 doing the work of $2, $3, $4 after we leverage it a few times.
Now, how does this play into kind of your claim to fame, which is helping people to eliminate taxes? Talk us through how this helps one to do that.
So that comes down to, you've probably heard of what's called the 179 deduction. We have a strategic partner where we can get what I call BDE, big dumb equipment. And this is more like big commercial heisters and forklifts and that kind of stuff. And we have a partner who can help us. Basically, what they do is they're the Airbnb of equipment leasing. So you buy the equipment, it's your company, it's your LLC, so on and so forth. But they totally manage everything from the leases to the maintenance, the insurance, everything. But what it does is it gives you these massive tax deductions. So just as an example, if you were to leverage some equipment leasing, and let's say you put $100,000 in, you could potentially get $1 million worth of equipment. That's an $800,000 tax deduction in the first year. Even if you're in a 50% tax bracket, that could wipe out as much as $400,000 in taxes. So you just kind of compute how much you're paying in taxes. We can kind of help you run the numbers. How much equipment do you need to get this year to knock out your tax bill? Then obviously what we'd like to see people do is take that money that they would have paid in taxes, throw it into policies, and now use your policy for your multifamily real estate, rental properties, development, whatever you like to do in the real estate world. So now you're basically using the IRS's money to fund your policy to eventually get real estate.
Brilliant. I have not heard of the big equipment concept. I mean, obviously I see people who perform at a high level, they'll buy a certain car that's over a certain weight, right? Which creates kind of a higher paying tax deduction, but to actually have it in raw equipment, how far do they push that? Because obviously the only downside would be if they can't rent it out, right? I would imagine. And then you're stuck with a bill that people aren't leasing. It's like owning an Airbnb property and nobody's booking it. Is there a certain threshold that you tell people to go, or you don't go beyond a certain limit to where they can make the payment should there not be leasings happening?
Yeah, you definitely want to look at all that. But the one thing that I've learned about equipment leasing is the demand is so
Mm.
high, they can't even keep up. In fact, the company we work with have orders on new equipment back out to 2028, and they can't even get enough.
Wow.
The largest equipment leasing company in the nation would buy $1 billion tomorrow if they could get a hold of it, but there's just not enough. So that part of it's kind of nice. But yeah, you obviously want to, be smart and strategic and throw in some what ifs. But the what ifs are very small in this particular industry, and years and years and years of data to prove that they can take a pretty good hit and still do very, very well.
2007 and 8, of course, the pandemic, all of it. It's withheld all of those market changes. It sounds like.
Yeah, what's really interesting about that is in a recession or in a down economy, leasing actually goes up
Mm.
because companies aren't interested in buying equipment. They're interested in getting projects
Yeah,
done, but it's much more efficient for them to lease it.
fascinating. Talk to us about what kinds of policies. Obviously, there's it's not a term insurance plan, right? It's a policy you own, kind of a whole life or kind of universal life. Is there a certain one? And obviously, your firm does this, right, and helps people get the right ones. But just at kind of a high level, is there some insight there as to how this whole process works? Would love to get some education on that.
Yeah, it's absolutely a permanent policy. We don't want to use term because it can't build up any cash value. We typically start with whole life because that gives us a lot of predictability, very easy to leverage. In fact, for the most part, when we leverage a policy, we're using outside banks to extend a line of credit, literally give us checkbook access to it.
Mm.
So that's the safest and the easiest. We have been blending what's called an index universal life lately. And so much of that depends on their age and health and so
Mhm.
forth. But when you blend the two together, you even have a more powerful potential for growth and opportunity.
Mm.
Um, we also build these for the least amount of death benefit, the least amount of cost that we can absolutely do so that we're building the most cash as quickly as possible so we can start using it and leveraging it right away.
Yeah, you're not doing it for the death benefit. I mean, that's a nice thing to have in place, but you're doing it so you can get access to capital, right?
Absolutely. Yeah, believe me, I've unfortunately for the many years as I've done this, I've got those calls where, a client's passed away and when they just can't thank me enough
Mhm.
because of this policy that they had and protected their family and their estate and so forth. It's a nice icing on the cake, but it's not necessarily the focus out of the gate.
Yeah. What type of amount, and I'm sure this varies a lot, but if people were to say, okay, I'm putting X amount of dollars in the market, I'm putting X amount of dollars, in savings. If someone were to say, okay, I can reallocate some of those dollars towards a policy, what should somebody have in mind as far as a rough, um, annual commitment to a premium that they could say, okay, yeah, I can stomach that. I can come up with that in order to build my own bank. And then how long would it take them to be able to really start to access that? And again, I get that there's a lot of variables here, right? Depending upon age and all kinds of stuff. But if you could kind of just give some ranges, I think to be helping people to see like, okay, I commit X amount of dollars per year, and in X years, I can actually start to access that. That'd be interesting to know.
Yeah, so it does. It totally varies depending on people's situation. The reality is, though, once people understand this, and I'll use myself as a perfect example, I try to get every dollar I possibly can to start in the policy. Because again, let's say I love stocks. Great. If I run it through the policy, I'll actually do better buying my stocks using my policy. Every investment gets better when you've run it through the policy first. So what typically happens is someone will start with us with, let's say, 20 or $50,000 a year. Within just a few years, they're trying to get more and more and more in because it's a great place for money to start.
Mhm.
So, but as a good rule of thumb, an insurance company is only going to let you put in about 30 to 35% of your gross income a year. So, if you're making 100 grand a year, you might be able to get a policy for 30,000 a year.
Mm-hmm.
When can you start using it? About as fast as your check clears. Now you won't be able to use the full 30,000 in this example, but you could certainly use $23,000 within just weeks of getting the policy started.
And you've got the benefit of this policy growing over time, right? Because it's is there any case in which the investment actually drops like it would like a stock market, like in the market?
Only if you use what's called a variable universal life, which we don't touch. We don't use those for leverage, but a variable universal life is basically buying mutual funds inside of a contract. And so, yeah, you could lose. Index universal life is tied to the market in terms of growth, but you can never go backwards in terms of losses. So if the market drops 20%, your worst year is a zero. And then, of course, in a whole life, we're told typically around November, December, how much they're going to pay the following year. So that's very predictable and knowing exactly what we're going to make each year.
Super fascinating to hear that type of risk floor is put in place, right? You can't go below this, which in these, uncertain times, that becomes a pretty interesting conversation for a lot of people to know that I can put money over here. And are there any limitations? And obviously your health needs to be somewhat decent, right? Because they're insuring life here, right?
Yeah, you're going to have to obviously, prove insurability is what we call it. So you're going to, but even then, because of the way we build these, there's a lot of room for health issues, so to speak.
Mm-hmm.
So we can kind of get people who maybe aren't the greatest of health because we're building for cash value and not death benefit. Yeah. We can get a few things through that normally wouldn't go.
And you can pull the money out to use as a investment strategies, as you said, or even as an emergency fund, right? I mean, there's no limitations on what it can be used for. It's your money, right? Or the policy money.
Oh yeah, absolutely. Do anything with it. Like I say, a lot of people used to use them to just finance their next car or a vacation, and then they pay that back and it's ready to go again. And that's, again, not a horrible strategy, but you're probably not going to get too wealthy buying cars. Whereas if you can use the funds for appreciating assets.
Mm-hmm.
And then, of course, what we love about real estate is, as your listeners know, you get appreciation, but you also get depreciation, and then you get cash flow. And those three things together make for a very powerful investment. So we love using real estate whenever we can.
Now, I'm a guy who's fortunate to have a big family. I've got 6 kiddos, and of course, we've got college savings, et cetera. It almost seems like this would be a good idea to put a policy on them and have this be their savings account that they can pull out for college or for marriage or for starting their first home, right? Is there anything that would not be wise about kind of that strategy?
No, in fact, it's a great strategy. I kind of, I say I cursed my kids with this entrepreneurial gene. None of them have jobs. They've all bought and sold their own businesses. They all run their own thing, so to speak. And they use their policies to buy businesses. My youngest son's on I think their 3rd business already this year, and they just use their policies as leverage. There's one other thing that your listeners might be kind of curious about. This goes a little deeper, but we actually can show particularly commercial real estate investors or business owners who took out loans for their business, how to pay off those loans with half the money in half the time, and then get a huge tax deduction at the end. So when you're looking at real estate as an example, I'm doing this with some guys who own a hotel. They have a $38 million loan, 27 years. We're going to pay that off in 14 years, but we're going to pay it off with 16 million instead of 38 million. So we're going to create so much equity so fast. Then they're going to get a $16 million tax deduction to go against ordinary income until they use it up. And then finally, as we like to do in real estate, they can just refinance and do the whole thing over again and just put tens of millions of dollars in their pocket.
Fascinating. Lovely idea. I love it. And again, I appreciate you coming on and sharing these strategies. Again, I think just these concepts alone make the listeners of Think Bigger Real Estate be able to think bigger about their own real estate portfolios, about their own wealth building journey. And of course, now they can actually have more intelligent conversations with people in their world. And those who know me know that I authored the book, The Upstream Model. These conversations allow you to be much more valuable to a wealth advisor as you begin to chat with your clients about these topics, and you have a great wealth advisor to whom you can refer people to on these concepts. Dan Thompson out of Boise, Idaho, being a great one. So I love it on all accounts. This is a great strategy that agents really need to understand and be able to talk intelligently about. In fact, this is probably a good time for me to kind of let the world know that Think Bigger Real Estate, my coaching and consulting platform, has been acquired by ProInsight. I've assumed the role of CEO there. So for those of you who didn't know that already, I've made it pretty public, but I thought I'd announce it again. And so this show is being sponsored by ProInsight, who does exactly that. It helps professionals to really collaborate together and have streamlined introductions to each other, to where these professionals don't work in silos anymore. They work collaboratively together. And the strategies that you've given us here today, Dan, really show us how those professionals can really be looking to have a common idea that both sides are promoting, right? The agent is looking through their database to identify people who could be, investors. They're referring them to the wealth manager to employ a strategy like this. And then they're bringing those funds back to actually invest in real estate with kind of additional funding that's not bank funded, but self-funded. So love it on all accounts. This has been a great episode, Dan. My final request my final question before I get to my final request, Dan, is that you are a big thinker. You're somebody who's obviously built incredible businesses. Sounds like raised an incredibly bright and ambitious family. And for 38 years, you've been helping people to avoid paying taxes, right? Legally. What is it that you do, Dan, to continue to be a big thinker, to continue to expand your business possibilities? What does that look like for you? Your kind of personal growth journey. How do you do that?
Well, I love to just keep learning and learning and learning. Some of these guys get in their head, they know everything and they quit learning. And I'm just always listening and looking for ideas and ways that we can create more cash flow, more tax advantages. It's helpful to have my boys are always, again, so we got 5 kids and Sunday dinners as everybody's sitting around throwing out ideas. We're always talking about money and investing and businesses and so forth. I love to hear from these young guys on some of the ideas that they have. And so, just never, ever quit learning and thinking that you've got the corner on how to do something, because you just never know who's going to have even just that much better of an idea that can help propel your wealth that much more.
I love it, Dan. Great stuff. I want to thank you for coming on and so generously sharing these incredible strategies. How can people get a hold of you if they really want to go in depth with you and kind of learn how to employ the strategies you've employed today? What does that look like?
So the easiest way is my email, dan@wisemoneytools.com. But Wise Money Tools is also our YouTube channel. I think I've got over 600 videos out there. We're on pretty much every major social media as Wise Money Tools or Wise Money Dan. But yeah, YouTube, Wise Money Tools, website, Wise Money Tools, Dan@Wise Money Tools. You get the idea. If you type in Wise Money Tools, you're probably going to find me.
I love it. You made it easy on us. Well, thank you for that, Dan. And again, I want to thank all those who have listened, whether here live with us and or will be listening after the fact. And my final request of all of us are these 3 simple words. You know what they are. Go think bigger. And Dan, appreciate you being here with us today and helping us to do that.
Thank you. Good to talk to you, Justin.
Likewise. If you found value in anything that you heard here today, do me a favor and just take a quick screenshot of this episode. Tag me in it on social media. That will give you the heads up to create more content like this in future episodes. Also, if you are wanting to build your wealth advisory team in less than 30 days that gives you 2 to 4 professional referrals every month, go to proinsight.com and or you can reach out to me directly